Hello everyone, and welcome back. Don't forget to subscribe for the latest Bitcoin news and price predictions. Bitcoin likely targeting $13,900 to $11,400, senior market analyst believes. This market analyst and strategist believes that Bitcoin is being pushed down towards $13,900 gradually. Caleb Franzen, senior market analyst and strategist at Cubic Analytics, has taken to Twitter to share his take on the direction where Bitcoin may be moving. He believes that the price of the flagship cryptocurrency is heading down in the direction of the $14,000 and might drop even lower. A target of $11,400 to $13,900 for Bitcoin. Franzen, who used to work as an analyst in the banking sphere and then switched into crypto analysis, shared a Bitcoin chart where he highlighted an area based on the previous BTC lows, where he reckons Bitcoin is currently heading. It serves as a magnet for Bitcoin, he tweeted, adding that this implies a target of $11,400 to $13,900 for the leading digital currency. By the way, if you want to support, please support by liking the video and subscribing to our channel. He explained that this target was the level where Bitcoin price closed in December 2017, which was the peak of that cycle. Besides, the same level acted as resistance in 2019, exactly at the $13,900 level. This makes him confident that BTC is likely to reach that target. However, it admits that it just could happen and is not a definite forecast. Bitcoin still underselling pressure. The flagship cryptocurrency has been trading in the range of $16,800 since December 14th. On that day, the US Fed Reserve announced another rate hike, this time by 50 basis points, which matched the expectations of analysts. The Fed also announced that it is determined to continue taking rates high next year, which would keep pushing stocks in cryptocurrency down. Bitcoin fell from the $18,244 high on that day and is now trading at $16,848, according to data shared by CoinMarketCap. BTC Fear and Greed Index tracks the Nasdaq to signal a bullish Saturday. Following a range-bound but bearish Thursday, the BTC Fear and Greed Index delivered early support. A return to $16,900 could signal a breakout session. Key insights. On Friday, Bitcoin slipped by 0.21% to end the day at $16,802. US economic indicators and the Nasdaq index left BTC in a tight range through the afternoon session. The Fear and Greed Index rose from 27,100s to 29,100s, signaling a bullish session ahead. On Friday, Bitcoin fell by 0.21%. Following a 0.04% fall on Thursday, BTC ended the day at $16,802. Notably, BTC failed to revisit $17,000 for the third consecutive session while extending its losing streak to 3. After a range-bound morning session, BTC fell to an early afternoon low of $16,770 before striking an early afternoon high of $16,966. The movement came in response to U.S. economic indicators that showed the early effects of the Fed's aggressive monetary policy moves. The range-bound session left the major support and resistance levels untested, with BTC recovering from the session lows to wrap up the day at $16,802. U.S. economic indicators in the Nasdaq index send mixed signals. On Friday, U.S. economic indicators revealed a cooling U.S. economy in a softer inflationary environment, while consumer confidence trended higher. Personal spending increased by just 0.1%, while personal income rose by 0.4%. Durable goods orders fell by 2.1% in November, reversing a 0.7% increase in October. The weak personal spending numbers showed consumers tightening their purse strings because of increasing economic uncertainty. However, inflation figures were BTC-friendly. The all-important core PCE price index was up 4.7% year-over-year in November versus 5.0% in October, with the Michigan Inflation Expectations Index down from 4.6% to 4.4%. The decline in inflation expectations contributed to a pickup in consumer sentiment, with the Michigan Consumer Sentiment Index rising from 56.8 to 59.7 in December. the Nasdaq index responded to the numbers, rising by 0.21%, with the S&P 500 gaining 0.59%. Considering the weak personal spending and softer inflation numbers, the Fed may be able to take a less aggressive interest rate trajectory. However, with the U.S. unemployment rate at 3.7%, well below the Fed's 5.0% target, another 50 basis point rate hike remains on the table. This weekend, investors should monitor the crypto news wires, with FTX and regulatory chatter being the market focal point. Barring a crypto market event, it will likely be another range-bound session, with volumes declining ahead of the holidays. The weekly chart is also demonstrating Bitcoin's current consolidation phase, with asset correcting by 0.75%. At the current price, a crypto trading expert, Michael van de Papa, in a tweet on December 23, suggested that if Bitcoin holds the $16,750 position, the asset could break and rally to the range of $16,900 to $17,000 and target $17,450. Bitcoin miner Core Scientific approved for $37.50 MLN bankruptcy loan. U.S. Bitcoin miner Core Scientific received court approval on Thursday to fund its Chapter 11 case with a $37.5 million loan from a group of existing creditors. U.S. bankruptcy judge David Jones approved Core Scientific's bankruptcy loan on an interim basis at a court hearing in Houston, Texas. The company will seek final approval of the loan and permission to borrow an additional $37.5 million in January, although the company's attorney said it is open to better financing offers from other lenders. Chris Hansen, who represents the creditors extending the new loan, said in court that existing stakeholders continue to have faith in Core Scientific's long-term viability despite the company's recent challenges and Bitcoin's falling price. After rapid growth in 2020 and 2021, Bitcoin, the most popular digital currency by far, is down more than 60% this year, pressuring the crypto mining sector. Austin, Texas-based Core Scientific filed for bankruptcy on Wednesday, blaming the sharp decline in Bitcoin prices, rising energy costs for Bitcoin mining, and a $7 million unpaid debt from U.S. crypto lender Celsius Network, one of its biggest customers. The company said in court filings that it would not liquidate and intends to pursue a restructuring backed by creditors who hold over 50% of the company's convertible notes. It is one of the largest cryptocurrency mining companies in the United States, and it mints Bitcoins both for itself and for customers, such as Celsius, which owns computers at Core Scientific's facilities. Thanks for watching. See you next video.